The Titanic was not just a ship, it was a business plan, built to dominate an industry, marketed as unsinkable, and insured for millions. Its true legacy was not heroism or romance, it was profit. In 1912, more than 1,500 people died in the freezing Atlantic Ocean. But the corporations behind the Titanic did not sink with them. They survived, they recovered, and in many ways, they won. Before we go any further, if you want real stories about money, power, and how history actually works, make sure you subscribe now. Fiscora Empire shows what most documentaries leave out. At the start of the 20th century, ocean travel was booming. Millions of people crossed the Atlantic every year. Immigrants were chasing opportunity in America. Wealthy elites wanted luxury and comfort at sea. Shipping companies were locked in a fierce competition for dominance. Bigger ships meant more passengers. More passengers meant more money. And prestige meant long-term power. The White Star Line was one of the strongest players in this race. But it was not just a shipping company. It was part of a massive American corporate network backed by financier J.P. Morgan. His goal was simple: control the market, eliminate competition, secure profits. The Titanic was not designed to be the safest ship ever built. It was designed to be the most impressive. Luxury was the real selling point: grand dining rooms, private suites, elegant staircases. Everything was built to attract wealthy passengers who could pay premium prices. Safety, on the other hand, was treated as a secondary concern. The Titanic's unsinkable reputation was a marketing masterpiece. It made passengers feel secure. It made investors confident. And it made regulators less aggressive. Confidence sold tickets. Tickets generated revenue. To protect the investment, the ship was insured for around $5 million at the time. That would be more than $150 million today. This was standard business practice. Risk was calculated. Loss was expected. The Titanic was a financial asset, not just a vessel. But beneath the luxury, serious problems existed. Lifeboats were limited. Crew training was weak. Emergency drills were unclear. The ship could carry over 2,200 people, yet it had lifeboats for barely half that number. Still, everything was technically legal. Safety laws were outdated and based on old ship sizes. The White Star Line followed the rules, even if the rules were dangerously behind reality. When the Titanic struck the iceberg, the disaster unfolded fast. Water flooded the compartments. Panic spread. Lifeboats were launched half empty. Many passengers never had a chance. The world was shocked. Newspapers filled their front pages with tragic stories. Survivors described the screams, the chaos, the freezing water. Families demanded answers, but while the public focused on the human loss, the corporations focused on the financial damage. Insurance claims were filed quickly. The White Star Line received compensation for the destroyed ship. Their losses were controlled. Their financial future was protected. The real cost fell on the passengers and crew, many of whom were immigrants with little legal power. Families tried to sue. They wanted justice. But maritime law placed strict limits on how much companies could be forced to pay. In many cases, compensation was only a few $100s per victim. The legal system protected corporate assets far more than human lives. The White Star Line did not collapse. It restructured. It continued operations. Investors moved on. Titanic became a tragic headline, not a financial disaster. And then something else happened. Titanic became a story. Books were written, songs were composed, plays were staged, museums opened, souvenirs were sold. The tragedy itself turned into a product. Over time, the Titanic name became a brand. Decades later, when the wreck was discovered, new businesses entered the picture. Salvage companies received legal rights to recover artifacts. Plates, jewelry, personal items, and even pieces of the ship were brought to the surface. These objects were displayed, sold, and monetized. Human loss became commercial inventory. Exhibitions charged high-ticket prices. Gift shops sold replicas. Emotional storytelling was packaged into experiences. Visitors cried. Companies earned millions. The focus stayed on romance and bravery, not corporate responsibility. Then Hollywood arrived. The 1997 Titanic movie became one of the highest-grossing films in history. It earned over $2 billion worldwide. The story focused on love and sacrifice, but behind the scenes, the same tragedy was generating massive profit. A disaster caused by profit-driven decisions had become a profit machine itself. But Titanic was not unique. Throughout history, disasters have often created new business opportunities. After oil spills, cleanup contracts are worth billions. After financial crashes, banks receive government bailouts. After industrial accidents, insurance companies adjust their models and continue operating. Risk is not avoided, it is monetized. The Titanic helped shape modern safety rules, but only after the damage was done. Lifeboat requirements changed. Radio monitoring became mandatory. Ice patrols were established. But none of this brought back the dead. Reform came after profits were already protected. What the Titanic truly revealed was the structure of corporate survival. The ship sank. The system did not. The public remembers the iceberg. The system remembers the balance sheet. And this pattern did not end in 1912. The system that survived Titanic did not stay silent. It adapted. It learned how to control damage, shape public opinion, and protect long-term profits. The disaster became a lesson, not in safety, but in survival. After the Titanic sank, governments promised change. Public pressure was intense. Hearings were held in the United States and Britain. Survivors testified. Engineers explained failures. Executives defended their choices. The story presented to the public focused on natural forces, bad luck, and human error. The iceberg became the villain. Corporate decisions stayed in the background. New safety rules were introduced. Ships were required to carry more lifeboats. Wireless radios had to be monitored at all times. Ice patrols were created to track dangerous waters. These reforms looked powerful, but they came only after the company's financial position was already secure. The White Star Line had been paid by insurers. Legal responsibility had been limited. The system had absorbed the shock. Behind the scenes, the shipping industry did not slow down. Competition remained fierce. Bigger ships were still built. Luxury remained the selling point. The lesson was not prevent disasters. The lesson was control the outcome when disasters happen. Insurance companies updated their models. Risk calculations became more precise. Premiums were adjusted. Losses were no longer surprises. They were part of the business equation. Public relations also evolved. Companies learned how to manage narratives. Instead of focusing on corporate choices, stories highlighted bravery, sacrifice, and emotion. Heroes were celebrated. Victims were remembered. Systems were rarely questioned. Titanic became less about responsibility and more about romance. And that shift was valuable. When the Titanic wreck was found decades later, the tragedy entered a new phase of profit. Salvage companies were granted exclusive rights to recover artifacts from the ocean floor. They argued that they were preserving history. In reality, they were building an inventory. Thousands of items were pulled from the wreck: dishes, watches, shoes, letters, pieces of metal from the ship itself. These objects were displayed in exhibitions around the world. Each ticket sold added to the total. Each emotional visitor became part of the business model. Grief became entertainment. The narrative focused on love stories and heroic moments. The deeper financial story stayed hidden. Visitors left feeling emotional, not informed. Then came the ultimate profit wave: Hollywood. The Titanic film was not just a movie, it was a global product. Merchandise, soundtracks, books, documentaries, and special editions followed. The brand expanded. The disaster was now one of the most profitable stories in history. A tragedy caused by corporate priorities had become a corporate asset. But the Titanic was only one example. The same pattern appears again and again. When oil rigs explode, cleanup companies win contracts. When chemical plants fail, legal settlements are negotiated. When banks collapse, governments step in. Loss is absorbed. Systems remain. The key is surviving it. Companies plan for disaster like they plan for growth. Crisis management teams are trained. Legal strategies are prepared. Insurance policies are secured. Public statements are written in advance. Disaster is not chaos, it is a process. And like any process, it can be optimized. In 1912, third-class passengers suffered the most. They were far from the lifeboats. Their survival rate was low. Their legal power was limited. Their compensation was small. The hierarchy of the ship reflected the hierarchy of society. Wealth bought safety. Poverty bought risk. That structure did not change after Titanic. It became more organized. Corporations learned how to separate themselves from direct responsibility. Complex ownership structures were created. Liability was distributed. Blame became harder to assign. Executives moved on. Shareholders stayed protected. Brands survived. The Titanic disaster did not weaken corporate power. It refined it. Public memory focused on the iceberg. Corporate memory focused on the balance sheet. And while the world cried for the victims, the system prepared for the next crisis. Because history does not reward those who feel the most, it rewards those who adapt the fastest. By the mid-20th century, disaster had become an industry. Insurance firms expanded. Legal firms specialized in mass claims. PR agencies mastered crisis communication. Risk became a product. Tragedy was no longer just an event. It was a market. And the Titanic had helped build it. But the story doesn't end in the past. The same structure exists today. Modern corporations are stronger, faster, and better protected. When something goes wrong, the system does not collapse. The headlines change, the stock recovers, the cycle continues. The Titanic was not a warning, it was a blueprint. A blueprint for how powerful systems turn loss into survival and survival into profit. And the world keeps following it. The Titanic disaster feels distant in time, but its business logic is still alive. What changed is not the system itself, but how efficiently it now operates. Corporations no longer just react to tragedy, they prepare for it, they predict it, they manage it. Modern companies run crisis simulations. Legal teams rehearse lawsuits before accidents even happen. Insurance contracts are written with precise limits. Public statements are drafted in advance. When disaster strikes, the response is not emotional, it is strategic. Tragedy has become a controlled environment. Look at modern aviation. When a plane crashes, families suffer. Investigations begin. News cycles explode. But airlines survive. Insurance pays. Stock prices stabilize. New safety promises are made. The system moves forward. Look at industrial disasters. Factories collapse. Chemical leaks. Poison communities. Workers die. But corporations issue apologies. Compensation is negotiated. Production resumes. Brands recover. The structure holds. Just like Titanic, the human cost is real, but the financial cost is contained. The people who suffer most are always the ones with the least protection. Migrant workers, low-income families, passengers who trusted the system. Their stories fade faster than corporate losses. The system does not remember faces, it remembers numbers. Titanic showed us that safety is often secondary to image, that laws change only after disasters, that accountability is limited when money is protected, and that pattern continues. After every major tragedy, reforms are promised. But reforms usually focus on preventing the same accident again, not changing the system that allowed it. We improve the lifeboats. We don't question the business model. We fix the radios. We protect the structure. Titanic is remembered as a story of love, bravery, and fate. But its deeper lesson is about power. Power decides what is built. Power decides what is ignored. Power decides who pays the price. The iceberg was not the real danger. The system was. Because the system made risk acceptable, the system made loss manageable. The system made tragedy profitable. Today, corporations are stronger than ever. Global supply chains stretch across continents. Financial markets move in seconds. Insurance firms operate at massive scale. Risk is no longer feared, it is calculated. When something breaks, the system does not panic, it adapts. And that is why Titanic still matters. Not because of how it sank, but because of what survived. The same logic that built Titanic still builds our world. Bigger, faster, more impressive, more profitable. Safety comes later. We celebrate innovation. We rarely question the cost. We admire success. We forget the failures beneath it. Titanic was called unsinkable. The system still believes the same about itself. And maybe that confidence is the most dangerous thing of all. Because when profit becomes the priority, people become the risk. Now let's end with 3 clear takeaways. First, disasters rarely destroy powerful systems. They strengthen them. Titanic didn't end corporate dominance. It taught companies how to survive tragedy. Second, the cost of failure is not shared equally. Those with the least power suffer the most. Those with the most resources recover the fastest. Third, history is often told through emotion, not economics. We remember the iceberg, but we forget the insurance contracts, the legal limits, and the business strategies. The Titanic sank over a century ago, but the business model that built it is still floating today. And the next tragedy is always just one decision away. If this story changed how you see history, like the video. If you want more deep investigations into money, power, and hidden systems, subscribe to Fiscora Empire. In the comments, tell us which modern disaster you think follows the same pattern as Titanic. And share this with someone who still believes big companies always learn from their mistakes. Because sometimes, the only lesson they learn is how to profit from them.